dear investors. Welcome to the podcast of Ljubljana Stock Exchange. With me, Krešo Vogrinic, President of the Management Board of InterCapital ETFs. Why are we here? We have a new ETF coming to Ljubljana Stock Exchange, InterCapital ETF on Poland, on Polish index, and it's a good opportunity to catch up with Krešo and talk a bit about the product. So welcome, Krešo. Let's jump straight into it. What's an ETF? What's the main benefit?
Yeah, thanks for the invitation. Happy to be here. Well, the main benefit of an ETF is that it's very transparent, cost efficient, and very easy basically to trade. It works similarly to a mutual fund in a way that it's a diversified basket of securities, but on the other hand, it's traded in the same way as a regular stock on the stock exchange.
Great. And internationally, worldwide, on the developed market, that's a pretty well-known product, right? And for our region, it's maybe still like a bit new. Internationally, how big is the success of ETFs?
Yeah, I mean, especially in the US, it's huge. I mean, a couple of months ago, there was a statistic circling that there are now more ETFs than single stocks in the US, which is quite fascinating. And the trend has been steadily moving towards Europe as well, growing in importance and in size. And basically, what we see is that this should continue in the region as well.
And you mentioned a bit ETF, mutual funds. What's the difference?
Yeah, basically the main difference is that you can buy an ETF throughout the day. So at any point in time over the course of the day, you can buy it on the exchange. Whereas you buy an ETF, you buy a mutual fund directly from the issuer, and it's usually at an unknown price at the end of the day. So this is basically the biggest reasons, and that's why I mentioned like this transparency. That you could buy it at any point in time over the trading day, and you know at which price you are buying it.
And compared to mutual funds that we know regionally, and ETFs are usually passive, right? What does that mean?
Yeah, ETFs can be active and passive, but they tend to be passive. This means that they are basically tracking a particular index that is set up to track a particular market. This can be a main index of a particular stock exchange, like in our case, but it can be also something thematic or whatever fits kind of the bill. And basically this allows the ETF structure to be more cost efficient versus the mutual funds, because you don't have the active management. You don't need a team of analysts in place who would analyze the particular companies, but you just track the index that you decided to follow.
So you don't beat the market, you track the market, you replicate the market, and this has an advantage of costs.
Exactly. The goal is not to beat the market. The goal is basically to track the performance of the market as efficiently as possible.
Great. And your company, InterCapital ETF, as the name says, ETF is the focus. How you decided on this? What's been the development of the company?
Yeah. So basically, InterCapital ETF as a part of the InterCapital group, which is a long-standing financial group here in the region. But InterCapital ETF is a relatively new company. It was founded last year. What happened? Basically, we decided to sell our asset management arm, but before selling the asset management arm, we carved out several entities from the asset management arm, and one of those entities was actually InterCapital ETF. So basically what we sold was the traditional mutual fund business, and what we kept was basically ETFs and a wealth management business. Why? Because these were the areas where we saw the most growth for the future. So we kind of felt that ETFs and in kind of a digital wealth management offering, that these were the future pillars for our growth, and that this is what the clients basically want. And now we continue to scale these businesses.
And Okay, I'm gonna jump straight to it. What's been the success that you mentioned? How many markets you covered? You started probably one, two ETFs. How many are there now? Have they grown? How many clients you have? And at the end of the day, how many exchanges are your ETFs present on?
Yeah, so we started basically with kind of the markets that we consider our home markets, and this is Croatia and Slovenia. We started that in 2020 as the first two ETFs. They were initially listed in Zagreb, and then we opened up the Ljubljana Stock Exchange as a listing venue. After that, we opened also the Bucharest Stock Exchange as a listing venue, launched an ETF that tracks the Romanian equity market. After that, also an ETF that tracks the Romanian fixed income market. We also have a money market ETF, basically on like the lower side of the risk spectrum. And now the latest one is our sixth one. It's basically an ETF tracking the Polish equity market. So starting from zero, basically 5 years ago, now we have around 185 million euros in total assets under management, and we have like almost 9,000 clients spread out on these three exchanges. So basically Zagreb, Ljubljana, and Bucharest.
And if we compare those numbers, like 9,000 investors for, let's say, 2 years ago, what's been the growth?
I mean, the growth has been quite substantial, both in terms of number of clients and in terms of assets under management. We saw a big jump when we opened the Romanian market. I think in Romania we're still in kind of the phase that we managed to attract a lot of investors, and now I think they're kind of testing us to see how we perform before they expand kind of their investments into our ETFs, which is something that can be expected, and it's reasonable. And I think the growth rates that we are seeing in terms of assets in the last 2-3 years should continue, and we are quite positive on the new ETF as well, given the size of the Polish market.
Let's follow on this. What investors you have in mind? Maybe, okay, you're based in Croatia, but you don't probably serve, as you mentioned, only local retail. It's across the regions, Slovenia, Croatia, and else, institutionals.
So we try to target a healthy mix of various types of investors. Obviously, in the beginning, it's retail, and retail is kind of the core of the product. But once the funds grow in size, basically they can attract institutional investors as well. And this is one of our goals, actually, to become the first stop for international investors who want to get an exposure to the region. And we do think that they should consider an exposure to the region, given the fundamentals and the diversification benefits, and basically the growth opportunities that at least we see in the region. So overall, a mix. And in the larger funds, like for example the Slovenian ETF, which is currently the largest ETF that we have, yes. I mean, it was also the best performing market, so it makes sense in a way that it's also the largest. It's close to 75 million euros at the moment, and thereby it's also the largest fund that invests in Slovenian equities, which we are proud of. So this fund is already now large enough to accommodate even tickets from institutional investors.
Great. So why Poland? Thanks.
As I mentioned, it's a huge regional market. It's the largest regional market, so it made sense for us to, as a next step, to cover the largest and the most liquid regional market. But also on the other hand, it's I think good timing for Poland, because the market is in a phase of relatively high growth in terms of GDP. It's a huge investment cycle is being undertaken in the country, both on the private side, but also on the public side. talking infrastructure, defense, and so on. And this is basically fueling the economy, which is growing quite nicely, and it's one of the fastest growing countries in Europe, with an expected real GDP growth rate in this year around 3.5%. And we are quite confident that this trend should continue, because we are also seeing that the credit cycle has reinitiated, because the central bank has lowered the interest rates a bit from the highs that were there to fight inflation. So kind of everything seems to be in place that for the next couple of years we should see solid growth rates in the economy, and I believe that we should translate to the market as well.
Right, and you will be tracking the WIG 30 index. So that's the biggest 30 companies from the Warsaw Stock Exchange. How does it compare to like our local S&P Top or maybe Croatian Probex? I think in terms of dividend yields and valuations, it's kind of similar. Correct me if I'm wrong. And what about the composition? What industries are represented?
Yeah, in terms of valuation, it's surprisingly similar, because I would expect a market as big as Poland and as liquid as Poland to be closer to like the EU levels instead of the regional levels, because Poland is, whereas here in Croatia and Slovenia, our goal is kind of to get to the point where we are considered emerging markets and no longer frontier markets. Poland is targeting to become a developed market, even is considered a developed market by some index providers, but the main one, MSCI, they're still considered emerging markets. So the point is basically that in terms of price earnings and dividend yields, the Poland is priced more like the region, whereas in terms of the
liquidity,
development of the market, the size and the liquidity, it should be closer to the developed markets. Part of it can be explained by the sector structure, because it's dominated by financials and energy, which are sectors that are traditionally high dividend yielding, low P sectors. But even if you look at adjusted the numbers or compare sectors with let's say MSCI Europe or Eurostoxx 600, there is a meaningful discount there.
Yeah. So okay, investors brings you money, you invest into those 30 companies. They indirectly invest, you said, okay, financial services, but there are a couple of sectors in Poland that are not really present here. I think it's mining. I even heard e-commerce, gaming sectors. So a few novelties.
Yeah. I mean, I said what was the dominating kind of sectors, but the other half of the structure is basically the real economy, and this is like various types of industrials, including also materials and mining, if you kind of consider that as a similar kind of bucket. But there are also some like new economies. You mentioned e-commerce, IT. There are some maybe well-known gaming companies as well that publish even like big global titles like The Witcher or the Cyberpunk, which are famous games in the gaming world, but also some fashion brands that might be even familiar to people here in the region, like Reserved, Sensei, Mojito, CCC, some brands that are quite well known in these markets, but people might not necessarily be aware that these are Polish brands, that you can actually invest in them through our ETF.
Great. So maybe any company that you want to like bring up, what's the sexiest thing now in Poland?
I mean, it's not, I wouldn't say sexy, but I think the dominant sector is the banks, and the banks are in a very good situation now, given the macro fundamentals and kind of with the interest rates being a bit lower now and at a level where the demand for loans is growing again. So I think this can be a very interesting sector, although it's not maybe as sexy, but as far as sexy goes, I would say maybe like Allegro, the e-commerce giant, or this company that is in the gaming industry. CD Projekt, yes.
And banking still brings in the money.
But banking, yeah, I mean, it's a sort of a bet on the economy, and the economy is doing really well, so it makes sense.
Great. Okay, but this ETF is brand new, only a few days. How did the first few days go? Are you like happy with it, successful? I tracked a few hours on Zagreb Stock Exchange, and you were the first instrument on the market by a very large margin.
Yeah, we listed on the 19th of May in Zagreb, and it was the most traded security on the market that day, with around 2.5 million euros of turnover, which is a decent number for smaller markets like Croatia or Slovenia, and the good trend continued also in the following days, and we kind of feel that there is a bit of a sort of a hype around it, that people want to get this exposure, that they have been looking at Poland as a success story, and want to be kind of part of it, of the continuation of the story. So we are quite happy with the start, and we are hoping that the trend continues, and that we see similar trend here in Ljubljana.
And this is probably connected to the obvious question about ETFs. It's very simple to invest in, right?
Absolutely. I mean, as long as you have a brokerage account with any player, basically, you can trade it with a simple click, as you would trade any other security, any other stock. And this is part of the attraction of basically the ETF, because it's very, very easy to get in and out, and it can be an instrument for long-term investment, even for your pension, for retirement. But it can also be a trading instrument, allowing you to easily get in and out of a certain market, which will be much more difficult if you were to buy particular stocks, each individual stocks. And it also allows you to trade with smaller quantities, because obviously if you wanted to buy each particular stock, you would need a certain amount of money to buy that, whereas with an ETF you buy a basket with a very low amount. I mean, we started with 10 euros, so this is basically minimum investments.
Yeah. And I want to expand a bit on the simplicity, transparency, and to go on. So for every moment, you know what's the real market value of an ETF, right? You have indicative net asset value. You calculate this all the time, right?
Correct. That is one of the benefits of an ETF, that, as I mentioned, the price is never unknown. You always see the market price, and you can always compare the market price to the indicative NAV. And the indicative NAV is basically the basket of securities that is in the ETF, multiplied with the current price of each individual security, and that gives you an indication of where where the market places the current fair value of it. So you always know whether you are buying or selling at fair value. And one also important thing is that an ETF has to have a market maker, which has to basically provide liquidity both on the bid and the ask side, so basically buying and selling the underlying security, and this is usually positioned around this indicative NAV, so quite transparent and liquid.
Yeah, that's exactly what I wanted to bring up. Like at InterCapital, you make sure that people, when they're selling or buying your ETFs, they always do it at as close to the market price as possible.
Yeah, and especially for sizes that might be interesting for retail investors, like you're talking a couple of hundreds of thousands euros, we try to make the spread as narrow as possible, to make trading of this instrument as efficient as possible, and this is quite often the spread is even lower than the underlying securities. So effectively, it's more efficient to buy and sell the ETF than to buy a particular security, even the more liquid.
At the start, we said, okay, ETFs usually they have a lower cost base compared to the mutual funds. What's the cost of this one? How much money do you take?
So the management fee is placed at 0.4%, which I would say it's quite competitive, and the total expense ratio, which is a number that is usually kind of the main number that investors look at, because you can expect if the tracking is good, that the performance of the ETF and the index would differ by the total expense ratio, basically. So the lower the total expense ratio, the better the tracking. And basically we positioned it like this. So that doesn't necessarily mean in the beginning that we take as much money as profit, because we do invest into the product at the beginning when it's still small, in order to keep the total expense ratio low, which means basically that we as a company subsidize some of the costs of the ETF before it scales up to a certain size. But our commitment is that the total expense ratio will remain below 0.6%. Why 0.6%? Because we're looking at the competition, and there is some competition for the ETF space for Poland, and the most notable one is the most famous ETF player in the world, basically BlackRock and the iShares brand of ETFs, and their total expense ratio is 0.74. So we decided to go lower than BlackRock in order to be as competitive as possible. And this is kind of also one point people sometimes ask, like, is this too expensive for an ETF? Because they might compare it to the S&Ps of the world, but obviously a fund that has, I don't know, 500 billion assets in under management and is also investing in a market where it's very efficient to trade and to settle, can have lower fees. But
basically for the local markets you're present, you try to be the cheapest provider.
Exactly.
Right. And let's talk about the other part of transparency. Basically, you publish on your website information all the time. What's the worth of the ETF? You have like monthly reports, but where does the money go? What's the expense ratio? Everything like that.
Yeah, one of the benefits actually of ETFs is that you always know the portfolio, either because you look at the index, so you can observe the index every day, even intraday, and you always know. But we also publish the basket of securities that is part of the ETF on a daily basis, not just a monthly basis. So this is like maximum transparency, and this is a place where we differ from the traditional mutual funds, and every other required report, like monthly fact sheets, the key investor documents, prospectuses, everything is always available on our website.
And investor can always check how successful you are. What's the
Absolutely,
tracking error?
absolutely. We transparently publish the tracking error, the tracking difference, the performance, and everything is always displayed in relation to the benchmark, and we are quite proud that basically our tracking is quite good on all of the ETFs that we manage, and basically the difference between, as I said, the performance of the index and the performance of the ETFs is usually more or less the total expense ratio.
Let's get a bit into the nit and grit of it. What do you actually do for the cost that investor pays? You still have, okay, not analysts, maybe it's a passive investment, but still a lot to do, like lots of stuff to do to keep the money safe.
Sure, I mean, you pointed correctly, analysts that would analyze the underlying securities, although we try to do that ourselves because we get asked by investors about the markets that we cover, and we have to be like very knowledgeable about these markets, but we don't use it to select the securities. We track it passively, but that's just one aspect of portfolio management. Not having that aspect basically allows us to have a lower fee, but the other aspects like keeping the assets safe at a custody bank, keeping risk management under control, keeping the tracking basically in terms of the portfolio management as efficient as possible, and also obviously
money laundering, investing,
of course, and also making the product as broadly available as possible on various exchanges. So this is all kind of part of the cost that we bear, and that has to be kind of offset in a way by the management fee.
You're obviously fully regulated.
Of course, we are fully regulated entity in Croatia, and all of our ETFs listed here in Ljubljana are passported to Ljubljana. So also the Slovenian regulator takes a look at everything and makes sure that the investors are quite safe on that front. And the only risk, I guess, that they have to be concerned about, the main risk that they have to be concerned about is the risk of the movement of the price, obviously, which is always there for financial instruments.
That's what you get return for at the end of the day. Okay, let's talk about the future at the end. What are your goals? How much potential do you see locally still? And I'm gonna dare to say that Poland is probably not the end of it.
You are correct. I mean, our strategy from the very beginning was to try to put this whole region on the map of both regional investors. So, for example, to put Slovenia on the map of a Polish investor or Romanian investor, and the other way around. To allow easy access for Slovenian investors to Polish equities or Romanian equities or Croatian equities, and we are going to continue this story of the region with new markets as well. Now with this new ETF, we are looking to expand our footprint also to Warsaw and to list the ETFs in Warsaw and make them available to Polish investors. Another goal is also to become available in the Western European market in order to kind of tell the story of the region to even international investors that are not part of the CE region. So we kind of we always say that the EU initiatives of the capital markets and savings union, we kind of put it into practice here in the region, and basically the goal is to scale everything up and to become as broadly available as possible with the products, and to cover the entire region with products. So future launches and future listings can be expected of us.
That's great to hear. So maybe to cap it all off, we covered a lot. What's the main thing you want to expand on at the end? Really focus on anything new?
Yeah, what I would like to just emphasize, and this is something that I always emphasize, don't overlook the region. It might not be the most liquid, it might not have hundreds of names, but the companies in the region are good companies. The performance was good on the business side. And this has been reflecting into the share prices as well for the last 10, 15 years or so ago. And the valuations are still kind of emerging markets sort of level valuation, which is quite a contrast compared to what we see, let's say, in Western Europe, but especially in the US. And given the sector structure that you mentioned as well, these markets do offer a meaningful diversification benefits for someone who has a global, let's say, diversified portfolio. So the main kind of message from my side is consider the region in a diversified portfolio. Don't put everything into the region, but consider it as a part of a diversified portfolio.
Great, Krishna. Thanks for catching up. Thanks for everything. And Thanks to everyone for listening. Goodbye.
Bye.